The benefit of having this credit shelter trust is that the surviving spouse is often a co-trustee, so they can keep their eye on it, they can help manage it, they can invest it, they can know what's going on. And the surviving spouse is often a primary beneficiary or the beneficiary of it if it's not with the kids too, right? The assets of the credit shelter trust, as I mentioned, are not in the estate of the surviving spouse. So estate tax savings there, which is great, right? And you can fund it using this disclaimer. So the disclaimer, you can do two ways. You can have a formula and you can say, I want to fund, you can write it in the will or the trust and say, I want, upon my death, I want to fund it to the full amount of the federal exemption, right, at the time of my death. So it's a formula. So it's flexible in that whatever that amount is when you die, that's that amount that's going to go there. It's great because you know exactly what's going to happen. It's bad if you fund it to the fuller amount. Now what's going to happen is on the state, you're going to have tax, right? Because you're funding it to it's going to be over the New York exemption to that trust, and you're going to have to pay some New York estate tax. You can also do a qualified disclaimer without a formula, right? So the advantage is there's flexibility there. You just have to remember to do it, but you'd have to remember anyway in a formula. So it's really not a disadvantage, but it's a lot more flexible. Now, what you do to disclaim is what you have is you as the attorney will file in surrogate's court something called a disclaimer. And then that disclaimer and the related documents that are filed in the county where they died has to be done within 9 months. Super important. If you don't do it, if you do it 9 months in one day, it doesn't work. You failed. So it's really important. That's something you have to be really on top of. If you're going to file a disclaimer, be sure that's done within 9 months of death.